It is Sunday, May 5th, 2019. I'm Justin Castelli. This is All About Your Benjamins and your weekly mixtape and your weekend review. And you may have noticed that I said Sunday instead of usually the Saturday video. For the rest of the soccer season, probably through the spring and through the summer, I'm going to push these until Sunday morning releases. So I'm recording this actually Saturday evening, but this will go out Sunday morning. The Amazon skills will still be Sunday morning as well. But if you're a parent and you have kids in sports, you know how crazy the weekends can be. And both boys are on different soccer teams this year. So we're going different places. So no more videos on Saturday. We're going to have them Sunday morning for you, but it'll still be your weekend review just like usual. So with that being said, let's get to this week's news that may or may not be impacting your financial plan and investments. And it was kind of a quiet week. There was a lot of things that happened, but relatively pretty quiet. We'll start with some economic news first. The Federal Reserve came out. I believe there's a meeting on Wednesday, and Chairman Powell said they're going to maintain keeping rates steady where they are. They're happy with where things are. The 2% inflation, give or take, is in good shape. So they see no reason to make any changes, and they're going to continue to let the data dictate what they do. And if you remember last year, they were pretty strong on what they were going to do. A certain amount of raises. They're very strong with their words. And then this year rolled around after the market kind of sold off towards the end of the year. They decided to soften up that language and be not so sure of what they're going to do and let the data dictate their decisions, which I think is smart. Why do something before you know it needs to be done? Leave your options open and then make changes as the time comes when you have the data that supports it. I did think it was interesting that there was one thing that Chairman Powell did defend, was the fact that inflation is declining. So year over year it's gone down some, and the concern there is what happens if it continues to do that. Could that harm the economy? So I tell you what, that is a job that I would not want. There is no win. If rates go up too quick, you're doing something wrong. If rates don't go up, inflation, so many things to worry about, and so many things are really out of their control. Yes, they can make the monetary changes that they do, but still, there's a lot of things to always have to be answering for. No one ever seems to be happy with what they're doing. So not a job for me, but that's what they're doing right now. So bottom line, rates are staying steady. The data will dictate what happens going forward the rest of the year. Unemployment numbers came out, and it was another good jobs report. We are at the lowest levels of unemployment in 50 years. So I think it's 3.6% is the unemployment rate. And now, just like the Fed having to defend inflation being lower, now we're worrying about, well, can we continue to hire jobs? If we're at 3.6%, is there enough opportunity out there to lure more people in from the sidelines? What's going to happen? We can't always continue to hire new jobs. So again, like so much in the economy and in the markets and the finances, it's almost like we can never be happy. When we want something, we finally get there. Now we turn our view to somewhere else to find something wrong with that new level we've gotten to. So now the unemployment is low. Jobs continue to rise. The concern was, can we continue to do that, and then what happens? But for now, we'll take the good jobs report. We'll keep the unemployment low and continue to see these numbers hopefully remaining strong. Maybe not growing as fast, but remaining strong. So that's it really from the economic news. We dive into the markets. You know, the last few weeks I've played the headline games. A bad headline at the beginning of the week, a good headline at the end of the week, or vice versa. Last week it was real estate. No headlines this week to really play that game. I couldn't find any. I was a little disappointed. I want to see how many weeks in a row I could do that. But this week the market ended up good, but the high note is, and it's almost like it's a jinx, this is the market's off to the best start in decades in certain areas. So for the Dow, it's off its best 4-month start since 1999. The S&P 500 is off to its best 4-month start since 1987. Now, if you know in market history, those are pretty ominous years. So now you're probably going to hear people say, well, if this is like 1999, is 2000 just right down the road? Are we going to have another big market crash? 87, we have October. We're going to have that again. So we're always going to be able to pull headlines in to tie to the data mining that we do with numbers to see if we can create headlines. But nonetheless, it's been a great start. A public service announcement, which is not advice. You know that this is never advice, but just something to think about. If you are sitting on the sidelines in money or cash, short-term things, and missed out this beginning of the year, these great 4 months, make sure that you consult a financial advisor, consult your financial plan if you want to get back in. We being investors have a bad case of FOMO all the time, fear of missing out. We've missed out on this great recovery after we got scared at the end of the year. We've got to get back in. Not to say that you should continue to stay, but you should never make decisions based off of headlines or what other people are getting in their portfolios. You need to do what's best for you and your situation. And the best way to know that is to have a financial plan, work with a professional to help you determine that what you need to do, and then also determine your best way to get in. And it never fails, so prepare yourself that the day you finally start to move money back in, if you're on the sidelines, never fails, always happens. The market's going to go down. It may not be a big decline, but it'll be enough to make you second guess that and maybe pull back. if you decide to move back and that's where you're going, you've got to be all in on your game plan, stick with it, and remember your long-term time horizon, and don't get caught up in what the headlines may do from week to week, because check in next week and maybe I'll have a beginning of the week headline different from the end of the week headline. So that is that on the market side. We'll talk about crypto real quick. It's been a while since I've talked about cryptocurrency, Bitcoin, blockchain, all of those fun topics. I just want to bring it up. There's an article this week in Wall Street Journal that Facebook is actually working on creating its own cryptocurrency to allow developers to basically use that cryptocurrency on its platform to conduct business. So I think cryptocurrencies and digital currencies are fascinating. I don't think they're going anywhere. I don't know to what scale they become in the future. But nonetheless, I'm going to continue to pay attention to it because I think it is something for the future, something that we need to be aware of. Some of my clients are interested in it, some of them aren't, but I'm personally interested in it, so I want to follow these stories and from time to time give you a little update on where it's at. So we're finding a big company creating its own currency, and I feel like not too long ago I heard about Nike doing something similar as well. I don't know if that's a true story. I didn't fact check it, but nonetheless, I think we're going to see more companies out there creating their own currency to conduct business on their platforms, which will be interesting to see how that works. And finally, we're going to end on a fun little topic. The boys, Roman and Leo, not Silas, but Roman and Leo and I just got back from seeing Avengers Endgame. We're big Avengers fans. This was a perfect end to the series that we've grown to love. I'm not going to give any spoilers, but just wanted to highlight that it, in its debut weekend, did $1.6 billion in worldwide sales, and or 1.2, I should say. Nonetheless, a bunch. Over $1 billion in sales its first weekend, and now it's approaching $2 billion. I've seen some notes and some tweets about the inflation-adjusted numbers for some bigger name movies in the past being pretty close to where Avengers is, but nonetheless, $2 billion is a lot. And interestingly enough, the movie that it's chasing, most people probably don't remember, Avatar. Not that it's real old, but I feel like it was a huge movie when it came out, and it just never really had a long lifespan to it. So Avengers will be passing Avatar soon, and then no one's ever going to remember that movie anymore unless you go to Disney and ride the ride. So that is it for this week. If you haven't seen Avengers, go check that out as well. We're going to go in and watch the Golden State Houston Rockets game now in the NBA playoffs. Been another great playoff series there. And if you're watching the playoffs, you saw Portland's game last night, 4 overtimes. It's been pretty exciting, the NBA playoffs, so I'll give a plug to that as well. But thanks for watching. Be sure to check all of the Mixtape articles down below. Subscribe to everything, YouTube, the blog, the podcast. Make sure you don't miss out on anything. Thanks for watching. We'll see you in the next episode.